DM, good morning. Welcome to the Milk Road Show, the daily crypto show that holds on like a meme coin trader in denial. I'm your host, Jay Hamilton. It's Monday, March the 17th, and today we are discussing the state of the markets. What is going on? Are we continuing to go in this bull run? Are we in a bear? We're going to look at some stats from over in Asia. We're going to zoom out a little bit, see the bigger picture, and see why, bull run might still be on. Also, we're going to look at some evaluation frameworks for new projects. If you're thinking about investing in a new token, how do you think about that? How do you decide if you should invest in that? What does that mean? Obviously, in these markets, you're trying to look for the alpha wherever you can, and we're going to get into some details there. We're also going to look at the state of token launches because, believe it or not, even in markets like this, even when it's red out there, there are new tokens launching. I'm not just talking about meme coins, I'm talking about fundamental utility-based tokens as well. And we're going to talk about what the state of those token launches is. Is it a good idea to launch a token right now? And is there opportunity as an investor? Today, to break this all down, we are joined by Laura Inamedinova. Did I get that right? I'll try that again.
Close enough.
Laura, close enough, close enough. Well, Laura is the chief ecosystem officer at Gate.io, one of the leading global exchanges, over 21 million registered users, 8 billion in user deposits. She's also a principal at Gate Ventures with over 300 million assets under management. She also was recognized by Entrepreneur Magazine as one of the top 10 women entrepreneurs. So really excited to jump in with Laura today. Now, before we jump in, if you guys want to hang out with us every day, you should join our Telegram group. I'm in there. The rest of the Milk Road team is in there, and we talk to you guys on a daily basis. So join the Telegram group. It's free, and we can chat on a regular and help you guys navigate this very difficult market. Today's episode is brought to you by Definitive, advanced trading on every chain. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Without further ado, Laura, welcome to the Milk Road Show.
Well, thank you for having me here. I've been a fan of Milk Road, for already a couple of years, I think. So excited to be.
Awesome. Love to hear it. Okay, let's start with what you're seeing right now in the industry. You sit in a very interesting seat at Gate.io, being one of the leading exchanges. You see a lot of the volumes and you see a lot of the behavior of what people are doing. From your perspective, with what you're seeing in the stats and the numbers, are we heading into a bear market? Are we seeing a decrease? Or is this just a pullback and the bull market still on?
So it's a very good question. And if I would have this magic ball to know what the future holds, I would probably wouldn't be here and be somewhere in Bahamas having, a cocktail. So in the end, we are in this interesting phase where on one hand, we kind of were expecting for the bull market to hit. And there was Bitcoin hitting 9,000 before correcting back to 80. Some of the retail institutional investors were like, yes, now we're in a bull market. Now all the tokens going to be launching. We know we're going to make a good buck. But then, hey, it all started to kind of crash down. And then with US and Trump being elected, on one hand, all the crypto industry was like, that's it. A person who loves crypto is in charge. There's going to be positive regulations. You're going to see more institutional adoption coming in. And what do we see? A meme coin being launched. What do we see? Tariffs being imposed. And tariffs are not a bad thing in the long term, but in the short term, that takes a very big toll on the retail. And if we're asking, is there going to be a bull market or are we in decline? I would rephrase this question in a way: will retail have money to purchase excessive amount of coins? Because right now the liquidity is very scarce. So like in the last bull market, I've been in crypto space in 2016. There were couple of thousand coins probably you could purchase. They were quite good with good teams with good track record. Right now, all of those founders that did well last cycle and their senior managements, they left to start their new things. That means we had an exponential growth in how many tokens are being launched every single day. So my question is, if we're having 10 times more tokens being launched, do we have at least 10 times more liquidity from retail? Unfortunately, not. I mean, in the end, we like it or not, I come from Lithuania, but US and Wall Street still dictates a lot of markets. And right now, people don't know how to buy groceries, at least in US. Prices are skyrocketing. So, crypto was never, this fundamentally safe investment as, for example, gold. And gold just reached all-time high of $3,000. I mean, what, a couple of days ago or last week? And crypto was always either you kind of gamble to see if something was not, or after you diversify into like stocks, funds, ETFs, you kind of put a little amount to crypto. Right now, when a lot of people are struggling to buy groceries, they're not thinking of crypto. So to answer your question, where we are right now, we're in this kind of crossroad, and retail is not in control here. Here, right now, we have politicians in major being in charge on what kind of monetary policies they're gonna start implementing within the next 3 to 6 months. And is there gonna be a recession or not? Because if they're gonna start, stupidly printing more money, and if the interest rates will have, a positive outlook, then yes, we're gonna have a bull market because there's gonna be more money in the economy and people are gonna start buying, everything. But if in macroeconomic level, the economies are not gonna be doing well, unfortunately, we'll go into recession. And if we're in recession, then gold is your friend.
And I mean, certainly we've never felt the tailwinds from institutions and regulatory clarity that we have right now.
Mhm.
So, and that's why, as you said, so many people expected that 2025 would be this mega bull run all year, up only. Dangerous expectations. Nothing is ever up only. But the tailwinds are very clear and very evident. At the same time, we have these macro headwinds that are currently keeping us down and keeping us underwater, or at least keeping us level. Now, that being said, it's tough to complain about Bitcoin holding around 80K. That is a strong indication of the future. But we're a macro asset class now, right? We're no longer a small asset class, right? Bitcoin is in the trillions. It takes much more money in order to move this thing if everybody expects it to continue to double nonstop. And as you said, we have a lot more tokens this bull run than we had last run. Last bull run, we had like 10,000 tokens. Thanks to pumped up fun and meme coins, we've got probably 8 to 10 million tokens now. So there's a lot, the liquidity is spread out over a lot more. It's why a lot of altcoins haven't done as well this cycle. There's just too much going on. And we haven't seen new retail come in, right? We haven't really, every cycle we had that moment where we have euphoria and mania and new retail come in. For you at Gate, are you seeing the same thing? Like, because Asia is a very interesting market, and we don't talk a ton about the Asia market on this show. We tend to focus more on the North American market. In the Asian market, what are you seeing? Are you seeing new retail investors come in? Did you see it maybe you already saw it in Q4 2024? Did a lot of them buy the Trump token, or is it just the same traders just trading back and forth as we've seen mostly in the North American market?
So unfortunately, we don't see a very big retail coming in. Right now, we actually see more institutional money flowing. But the issue is institutional pockets are never going to be as deep as retails. Because in the end, if we're thinking of high net worth individual, family offices, maybe pension funds, at maximum, at best, they're gonna allocate what 1% to a risk investment like crypto, and that's the best case scenario. Usually, if it's a huge pension fund, it's gonna be 0.001. So even though we see big TradFi firms like BlackRock, Fidelity, Franklin Templeton are deeply involved in crypto, from like tokenization to ETFs and digital asset investment strategies, they're more talks and good PR rather than the amounts that would actually move the candles up. So I wish I would be more positive and be like, yes, Asia is going to save the market. Asia is not going to save the market. I would actually, again, it's my personal opinion, I would say US is the country to have to look into. And if there's going to be very good regulations, changes in laws, that's going to be the needle is going to actually pull everything. Plus,
Mhm.
we see right now SEC is dropping all the lawsuits. They drop lawsuit against Kraken, the Coinbase, and among others. So that's a good indicator. So we need more money being printed, crypto becoming properly clearly regulated in US, and then ideally Web2 products, Web2 investment products being like, hey, our retail, our users want crypto. Why don't we start offering some sort of even simple financial products to enter crypto market, like ETFs as an example, and that's gonna push the needle. So Asia is amazing. It's doing very good. We already talked before to show that Vietnam, Thailand are great markets right now, especially when it comes to traders and just volumes. But if we want Bitcoin to reach 100,000 and all these projections 150 200k that looks so impossible even at this stage, unfortunately we need the US to make some moves.
If you're only trading on centralized exchanges, then you're not going to make it. The best traders know the alpha is on chain. Definitive, founded by Coinbase alums, lets you trade any token on Solana, Base, or any chain all in one platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on chain. Plus, you get the best prices as your order is routed instantly through every DEX and liquidity pool, getting you up to 19 times lower fees. Trusted by funds, whales, and the milkman himself, now you too can trade like a pro. Milk Road listeners get a tasty glass of milk with zero fees on your first 25,000 at milkroad.definitive.fi. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Steakhouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCSUSDL is gaining traction at milkroad.com/Coinshift. Yeah, and we don't we're in a bit of a holding pattern right
Mhm.
now with the U.S. Right, as you said, a lot of uncertainty being created in the U.S. economy
Mhm.
as a result of tariffs. Doge is really leading to the economy to Trump has said it himself. He does not care about the stock markets. He wants to push the US economy down a little bit. He
Mhm.
wants to get it down and then he wants it to grow for the next 3 years of his presidency. No surprise, right? Like take the
Mhm.
pain in year 1 and then hopefully ride the highs through the rest of his term so that he can get another term in office. So that's no surprise and we don't know, right? The the market is pricing in that we're going to see rate cuts in the US this year, and we might see those soon if the economy can continue to struggle. And the hope is that we see these rate cuts and then that leads to a push. Will we see QE in the US? Don't know. If we do, they probably won't call it QE, that's for sure. I
Mhm.
think we're done QT. So it's a bit of a wait and see on the US right now, which is kind of how it feels in all markets. So when we zoom out, there's this question of like, and a lot of our listeners and what we're encouraging everyone to do is just be patient. This is a time
Mhm.
when like don't panic, don't sell, don't rage quit, don't
And
leave,
don't
be
buy.
patient.
Wow.
Yeah, like reallocate your portfolio, take a hard look
Mhm.
at your portfolio and think about like, are there tokens that you're in that you might think, like I might want to take a loss on this one. I don't know if this one is going to come back, because the truth is a lot of tokens can
Mhm.
have that big rise and then they never come back if they don't have the fundamentals. There's also a bit of a shift from pumpamentals to fundamentals happening. Are you noticing that on your end? Like, are we still in meme coin season in Asia? Because we're definitely not in meme coin season in North America anymore.
So before I answer this question, actually, while we were talking, I found a very interesting piece of statistics and graph, which I will ask your post production team to just add it here for everyone.
Mhm.
Basically, now here you can see a Bitcoin retail and large investment holdings. And in this graph, you can see that around the time of 2024 November, when Bitcoin was reaching all-time high, all the retail started to basically sell, whereas large institutional investors are started to buy and acquire more and more Bitcoin. So right now we have a huge gap between institutional investors who are owning, according to this interesting statistics, around 1.7 million in Bitcoin holdings versus retailers that they have only a small fraction of it. So very interesting data. Retail is not holding Bitcoin. Institutions are. Institutions are continuing to purchase. So something very interesting for your audience to kind of look into. And then to
Yes.
answer your question, mhm,
I was just gonna say, certainly it feels like, and you could, I mean, the stats say it. 100K it's a round number, and round numbers have an effect on markets. And what did 100K do to the Bitcoin market? It was a signal to a lot of
mhm,
long-term Bitcoin holders, like, hey, I'm out. This is enough for me. I've had my gains. I'm out. But at the same time, the institutions are coming, which should feel so bullish, right? It is long term. It is incredibly bullish because, as you said, what are these institutions doing? They're not taking big percentages of their portfolio yet. They're testing the waters. And so
mhm,
what will happen is they're going to test the waters, they're going to get in. Two things happen with institutions: they're not trading. They're in for a long time, right? So they're not in and out like retail is. And also, because they're testing the waters, they should be adding over time, is what will likely happen in the coming years. Anyway, sorry. Go to your
no, but
go
like
to
you're 100% correct. Like, look, BTC ETF alone saw more than 25 billion of net inflows in the first 2 months.
It's
25 billion.
crazy.
That's an incredible amount. So 100%, I would say retailer are not doing good. And look, if you bought Bitcoin somewhere at the bottom around 20,000 and then you waited it out till 100K, that's 5x. And this market making 5x, that's incredible because the markets of 10, 20, 30x are not going to happen anymore. It's not 2016, 17. And now, kind of coming back to your question, what about the meme season? Thank God it finally over. I am so, so grateful that people understood that gambling is fun, but that is gambling, and kind of started to reshift their focus to other industries and other narratives. And right now, we see anything still AI, especially AI agent related, doing very, very well.
Really?
And yes, for whatever reason, still, at least from venture capital perspective, that's what the projects we're seeing, raising
Mhm,
and sending us decks the most.
mhm,
In terms
mhm.
of projects that are actually getting funded is infrastructure. Throughout the years, anything infrastructure, especially when you're solving very complicated issues or problems in a very simple way, is something that grabs attention of venture capitalists. As well, we kind of saw a little bit of slowdown from especially tier one VCs, but now we started to get more and more announcements of like Dragonfly, of Sec1, Pantera starting to reinvest again. So that means they made a pause throughout probably around all-time high season. That means like December, January, they were slowing down, and now they probably closed around within last like month or two. They're starting to announce because usually it takes around 2 to 3, 4 months from the moment you start talking to actually going through the deal and then you announcing, and that makes sense. You don't want to invest when the market is hot. You want to invest when it's the bottom. So me seeing especially large tier one VCs right now starting to announce their investments is a good sign because maybe we're actually reached the bottom. Who knows? And we can see more and more liquidity coming in. But again, it all depends on people who are very much above us.
Mhm, mhm. Okay, let's take a look because it is interesting to think about new tokens that are launching, and I don't mean meme coins necessarily. I mean new projects that are
Mhm,
launching that are fundamental utility based, like
mhm,
real projects that have maybe
mhm.
their infrastructure, maybe their DPIN. Um, how do you sit in this interesting seat being on the venture side? How do you evaluate projects that are launching and looking at investing in them? And then I think I would love to sort of dovetail that into how a retail investor should be looking at new projects.
So If you're a retail investor, you're probably getting into a project two-way, or you're getting into some kind of early community round, or you're already getting it at the exchange listing. Because right now we don't have these ICOs anymore. Usual cycle is there's some kind of seed, pre-seed, VCs come in, there is a KOL round, and then there's usually exchange listing. Sometimes they do DEXs, but I don't understand why you're doing DEX. There's no liquidity in DEXs. So if you're, I'll talk more from the retail perspective, as this is going to be more interesting for the audience. You have to think of one key thing. When the project goes into the exchange, that means there's going to be some kind of unlocks, either from VCs or from KOLs. And in current market, no one is making money. What does this mean? This means if the token is launching at any kind of multiplier, even 2, 3, 4x, everyone will want to take profit and will want to dump the token. So you have to be 100% sure that you know the tokenomics and you know what's going to be the sell pressure. Because and then what founders do on the day of the launch, and I also have a marketing background, so I helped a lot of token launches back in the day, is there is buy pressure and there is a sell pressure. And founders need to make sure that the buy pressure is bigger than the sell one. And in this market, when no one is making money and there is not a lot of retail coming in and sweeping, like look, Parachain launched recently. It didn't as well as everyone expected it. Like Monad's gonna launch very soon. We'll see how it's gonna be. There's no retail. So as a retail investor in this current market, I would be very, very cautious to invest straight on the day of the listing unless you're 100% sure there's not gonna be that much sell pressure. I'll be cautious. Number two is then kind of continuing on this tokenomics route is there's going to be unlocks and there's going to be dumps. So again, you need to time it very, very well. Make sure if you don't have the tokenomics of the project and it's an early stage project, you know it's still and have a lot of unlocks, be careful about it. Be very, very careful. Get the tokenomics or just don't invest because you might get drugged just because of simple, market dynamics. Then if you're 100% sure there's going to be no unlocks, then you have to ask yourself this question. In this market, how can you be sure that the founders have enough budget, simply budget, and be, of course, knowledge and talent to sustain the token price and pump it? Because in the end, in this market, everything goes down. So if you're sure the founders have enough resources, capital, and that usually is if they did a very good rounds, then sure, you can kind of bet it. But if the project didn't, raise 10, 20, 30 mil, because marketing is very expensive, KOLs are very expensive, everything is very expensive in this space, with all due respect, I don't think having 100 to 100,000 marketing budget in this market, you can sustain a token price for a long period of time. And this, what I'm talking about new projects. I'm not talking about established projects. Then number three, make sure you are part of their community, their Telegram, Discord, whatever they have, and try to find alpha if there's going to be any kind of partnerships, positive announcement, because in the end, people trade the news. So what you have to do is buy the rumor, sell the news. Try figuring out if there is anything big planned. Try to meet team. If you're in a jurisdiction where you can actually go to a conference, meet the management team, meet the founders, do that, talk to them, ask them. Usually, if you just talk to the person, they're going to slip in. They're going to say, yeah, we're planning this integration, we're planning this update, whatever. Try to get this information, try to get those rumors, because if you want a special trade, you have to trade edges. You have to have some kind of alpha, because if you're just looking at the candles and you're believing in, all this technical analysis, well, I'm not the person going to help you out. I'm looking more from fundamental perspective and from the perspective of, can I get an edge, an alpha to see that, hey, this project is going to do well. One more thing that's very important is to focus on real adoption metrics. I will shatter a lot of people's perception on crypto. And again, I come from marketing background, so I've been doing that for many years before going to VC round. Is majority of data is fake. Twitter followers, Discord community members.
So when you wait, let me say it. When you say fake, do you mean like you don't mean like they're lying? You don't mean fraud. You mean like Twitter? Sure, they have 100,000 500,000 followers, but they're fake followers. That's what you mean.
Yes, yes, exactly. Like right now, you can spend. I think it was back in the day, like $50 to get like 5,000 fake bots that also engage with your content. Like that was a normal thing. Oh, let's buy followers. I'm
Mhm.
very against it because who cares if you have 100,000 community members? They're not gonna. They are fake. They're not gonna buy anything
But
from you.
don't a lot of exchanges, so like one of the keys for a new
Mhm.
token is to get listed on
Yes.
centralized exchanges. You said it yourself, right?
Mhm.
Like you can get listed on a DEX, but DEXs
Yes.
don't have the liquidity that centralized exchanges have.
Yeah.
Uh, s- and and there's a whole process to get listed on a
Yes.
centralized exchange, right? You can't, it's not like centralized exchanges just list any new token.
Mhm.
And a lot of centralized exchanges, they'll do things like look at your Twitter followers, and you have to have a certain number of Twitter followers. So what a lot of projects do is they buy Twitter followers so that they can hit that benchmark that is required by the centralized exchange. And
Of course.
I'm not defending, I agree
Mhm.
with you, right? Like buying Twitter followers is not a great marketing tactic by any means, but getting on a centralized exchanges
Mhm.
is key, right?
So if again, it depends which exchanges you're dealing with. At least at Gate.io, we know how to check. So having fake followers is not going to help you out because the listing team is going to see it within first look and it's going to ruin your reputation or credibility. So maybe some thing is again, when it comes to exchange business, there are the exchange that actually have volumes. And when you list on a token, you get some volume naturally organically from the exchange. And there are other exchanges that don't have volumes and they're wash trading. And we all know it's a open secret in our industry. But they live not from the trading fees, they live from the listing fees because some of these listing fees are outrageous, like hundreds of thousands of dollars for an exchange that they're not going to bring you any volume. So of course those exchanges, they're not going to care. They're like, you're ready to pay the listing fee, we're happy to take it. So as a founder, you also have to do due diligence and you have to be smart about it and look into who you're talking to and what kind of metrics you're getting because exchanges will check. They check they're gonna Twitter followers. Same thing with, for example, TVL. Another thing that a lot of founders are faking it, just asking liquidity provider to kind of stake the tokens. And I've seen product that they have, let's say, 50 million in TVL, but 45 million comes from one person, from one whale.
Mhm.
Yes, it
Yeah.
looks like a 50 million, looks like an amazing number. It's not true. So as a retail investor, you have to be very, very careful and understand how the market works. That's why, again, not a financial advice, your money is at risk, but look more at fundamentals and look at the macro perspective. If the market is down, it's better time to buy than when the market is up. And if you're going to day trading, well, then you're on your own.
Well, and it's so funny because you say that would say to me that now is the time to lock in if you're an investor and to be really focused on the market because the market is down. And now is, as you said, now is when you buy, not when you sell. But a lot of people do the opposite. Fear comes into place in these markets. They sell, they panic, they think, oh, it's never coming back. But what also you're saying is we are we're an evolving industry. And as the industry evolves, it gets harder and harder to make gains, right? And there is look, I'm not going to take away from there is generational wealth to be made in crypto. We are still early. I very genuinely believe that. But with each cycle, it does get harder, especially as there is more and more tokens. So it's not as easy to know which ones to buy and which ones to sell and where the opportunity is and where the money is going to go. And also, as the industry evolves, we're getting a lot less of the uh, retail who wants to just come in and gamble. We'll always have that. And you said it yourself. You're excited that meme coin season is done. It'll make a comeback. There will be another meme coin season. There's no doubt about
Unfortunately.
that.
The problem is
but
we're in very turbulent times, and like you can say it's the bottom. I wish I would. Yeah, it would be the bottom, but then on the other hand, we don't know what's gonna happen. In a week, there might be another black swan event, and
Mhm.
then good luck all the fundamentals.
Yeah, I mean, the I think the thing is like you have to really, as an investor in crypto, you really have to know your timelines
Mhm.
constantly. As an investor in anything, you really have to know your timelines. And so if your timeline is that you need money in the next like 3 months because yeah, I don't know, you have some life expense or you're buying a house or who
Get
knows,
a
right?
job.
You know,
Just get a job.
yeah, true. Go get a job and get a job in crypto and build something for the long term and make. Yeah, I mean that's obviously that's a great perspective,
And I mean,
but
look, I have one more last thing to add before we go probably to some other conversation topics. In January and February, we saw a record high number of launches, more than 240 across all of the like layer ones and layer twos. But after 30 days, only 8% retain significant liquidity.
hmm.
Like,
So these are when you say these aren't meme coin launches.
no, these are not meme coin launches. No.
These are legitimate projects
Yes,
such as
exactly.
Chain. So we
Yes.
saw 240 of those and only
Yes.
8% kept liquidity. Is that what you said?
Significant liquidity. Yes, after 30 days.
Jeez,
That
there's
was a
just
piece of statistics I found while I was preparing for this podcast. And I could give you another very interesting fact. So many of these new token launches had hugely inflated FDVs, like 1 billion more, but they all release only 3 to 5% of total supply into circulation.
Mhm,
What does it
mhm,
mean? Did create a huge supply overhang, basically leaving a heavy sell pressure to all the unlocks. Like, it's not sustainable. These projects are launching at huge FTVs with very small floats are not going to do well long term. And some of these called VC coins are not going to do well for retail. And you have to be very, very careful as a retail investor investing into that.
Well, it's funny because like that's why retail loves meme coins because
Mhm.
it's simpler, right? I don't have to do all the research to understand the tokenomics, to understand the token unlocks, to understand the fundamentals of the business, to know who the team is, right? It's pure gamble, so I might as well just go for it. Now,
Yeah.
what you're
But
saying,
one more thing, there was a statistics, and I need to find this picture so you can share it with everyone. Only, I think it was only 1,000 people made more than 1 million from pump.fun.
oh my god.
So yes, we have this here the stories as this 14-year-old becomes, rich overnight, but that stories that media loves because that generates clicks. Realistically, majority of people are losing in
Mhm,
pump.fun and all of their equivalents. And the problem is our psychology works in this very interesting way that they want to believe, that everything happening is happening good for them. And they hope they're gonna be that lucky one. And then they start gambling because in the end, meme coins are gambling. There is no fundamentals. There is no logic behind it unless you have some kind of insider information.
mhm.
And
But the thing is, what we're saying though is that uh, even fundamental based infrastructure, it's also gambling right now, right? Like, don't get me wrong, I'm not talking about the majors, the coins that have real revenue, the projects out there, and there's a lot of those. There's a lot of fundamentally strong projects that you can invest, but they don't get a lot of attention other than like, Bitcoin, ETH, and Sol. Sure, they get a lot of attention, but not a lot of people are talking about the other fundamental, a lot of the DeFi projects that are doing very well. They've been around for a while. They're not as sexy. Like, Aave, like, are people really excited about Aave? Like, maybe, but not like they are. They don't get the attention that
Mhm.
new projects get, right? New project comes out, gets a lot of attention, gets a lot of hype. But really, the investing in a new infrastructure project is really just as risky as investing in a meme coin at this point. It's just a different set of risk.
I wouldn't say it's the same as
You
risk.
don't
I
think
think
so?
I
I
know
think
because
so.
at least with infrastructure project, if the team's legit, you do all the research, they actually want to develop the product, and we take out all, potential bad actors out of the picture, at least you see the tokenomics. You see their business idea, business vision, and some kind of strategy, how they see the token being used, and then down the line increasing the value. So at least you can see some sort of vision. Whereas
Mhm,
with meme coins, like, trust me, bro, like that's it. There is no strategy. There is
mhm,
absolutely nothing. The only thing you can bet is like the community is gonna be cool and they're gonna chill it. That's it. So if you're betting on like, yeah, like we're all fun, crypto bros, we're gonna chill something, sure. I think, but I wouldn't be trusting on that versus an experienced team have a reputation that they put on the line that they want to actually deliver something, and they see a problem, and the founder is, they can't sleep. They want to find a solution for the problem, and you see
Mhm.
the perseverance. At least I can bet on him not trying to rug. And yes, if the project doesn't work out, it's still risky. I mean, we're talking about early stage investment. Everything in the space is risk, but it's less risky than I'm like, trust me, bro, this meme cat is cool, so everyone's gonna buy it.
The next cat, the next dog. Uh, Let me ask you, you previously, I think you got your entry into crypto through an ICO. Is that correct? That you
Correct.
Can you tell us that story? Because we don't get a lot of people that did ICOs back in 2 cycles ago on the
So
show.
I'll tell you exactly how I went to crypto. So back in my college, I studied physics, and I was, I think, in second year of my uni, and that was what I was like 2014.
Where'd you go to
Uh,
college?
in Lithuania, in Vilnius
Okay,
University. I unfortunately didn't go to a fancy college,
that's
but I
okay.
got a full scholarship to study in my home country. And basically, one of my classmates were like, "Laura, there is this called thing called Bitcoin." I'm like, "What is it?" It's like this magic internet money. I'm like, "Tell me more." And that's how I learned about it. And then, as one part of my uni study, we had like microeconomics, kind of finances, and everything. I needed an extra credit for my to get like a better grade. I'm like, can I do a presentation on something interesting about economics? And the professor was like, yes. So in second year of college, I was doing a presentation about Bitcoin, and I
Right.
got an extra
And this
grade.
is 2016?
That was no that 2016. I went into crypto space. That was, I think, 2014.
Okay, so no, no one, you're presenting Bitcoin and nobody knows what you
Yes,
this is new to
exactly.
everybody. Okay, yeah,
Yes,
yeah.
I like, "You're crazy." The
Yeah.
only bad thing, I was a broke college student back then, and I couldn't convince my parents to, like, sell the house, take the second mortgage, go all in crypto. But I bought a little bit, like, a couple of $100. It did well, I sold, and then 2016, I bought was, like, around $2,000. I bought with all my savings. Again, it wasn't a lot, but it was something that kinda allowed me to go into that space. And then I was already in tech, helping with tech marketing. I was actually invited to do one of the first ICOs. And I remember when the guy approached me, he was also from Lithuania, and he's like, Laura, we're gonna do this ICO. We're gonna have a free W's website, white paper, and a wallet. And trust me, we're gonna do good. And I'm like, are you crazy? He's like, no, 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 it's fine. Like, and if you're gonna help us out, like it's only like 2 months project, we're gonna share with you like a percentage. I thought he was crazy. Like, honestly, like, where's the company register? Like, we don't need a company. We have a wallet. I'm like, is this even legal? He's like, yeah, yeah, like there's no regulation. It's fine. I'm like, I was just out of college. I had nothing to lose. Like 2016, so I was what, 21 years old. And I'm like, sure, bro, let's do it. We raised 7 figures back in the day within like a week. And then I was like, my friends go to work in like TradFi and they're grinding 12 hours in like a bank or something. I mean, I could probably do this. So then from 2016, I helped quite a few crypto projects to launch. Some of them did miserably. I mean, I have no understanding, like no one had understanding back then of what crypto is and like how to do everything, but some did quite okay. If you remember Waves platform, the OG layer one, I worked a lot with them. Some of them give me tokens, and those tokens kind of did okay. So that's kind of where I started my crypto journey. Then started my marketing agency, worked a lot on that, and
So
then kind of into investing.
your original project that you worked on, like, is it still around? Like, was it a rug? Like, I gotta ask.
Right. So they actually delivered a product. It was
Okay.
a gambling project back in the day. They delivered a product. That wasn't an issue. Are they around right now? I have no idea. I haven't checked for many, many years. But at least we delivered. I'm very happy about it. It was delivered. It was good. There was no issues with that.
But you got to basically go through an ICO very early, 2016. Like, that was 2016, 2017. I mean, that was the ICO cycle when
Yes.
everybody was we were seeing that. And
We
what I
were
think is
still
int
ri sorry to interrupt you, but we were still writing white papers, and people
Yeah.
actually read white papers. We were
Yeah,
still
yeah.
posting in Bitcoin Talk forum, if anyone remembers the
Mhm.
forums. Like, we had a thread there, we had to answer questions, like, that was such a dystopian marketing compared to now.
Yeah, it was very different, very different. Yeah, and I mean, a very a very interesting way to learn about the space, to go through an ICO process very early. I mean, happy to hear that it wasn't a rug and that the product was actually delivered. I mean, who knows what happened to that product? And no surprise, that's a lot of products very early on, they do fail. And that's, I mean, look, anybody who's sitting here saying that, oh, my token or my investments are not going to fail, for all these reasons, no, like, let's be real, this is high risk, there's a high failure rate. It is difficult to succeed in starting a new business and to make a business that is sustainable. It's very challenging, especially when you add in tokenomics and all these new things and these new innovations that we're all still trying to figure out. Uh, where do you get your alpha from? If you're, if you're looking for alpha, where are you getting it from? Because I think that one thing that we talk a lot about on the show is how challenging it is to find trustworthy resources and trustworthy information.
Meeting people in conferences in real life.
Hmm.
Even though everyone's like, this is a decentralized industry, everyone can be anywhere. You have to go to a conference, you have to meet a person, shake hands, go for coffee, go for lunch, build a relationship, and that's when you're gonna get the best alpha. I hardly read crypto Twitter. I read it for news to see what's happening in the space, but I don't read for alpha because I don't trust any of KOLs, and we can talk about it a lot, but do not trust crypto KOLs at all. Discord, Telegram.
Why don't you trust KOLs?
So I'll tell you a very good story again. I come from marketing background. So while at a marketing agency, we have done the research, taking all the top KOLs. We're talking like those who are having hundreds of thousands Twitter followers, and seeing what kind of signals they kind of post, and then how did those tokens perform. And what we found out is they were actually working with market makers to inflate the token price as after the time of the signal to kind of show that yeah, we're actually doing well, where in reality it would all be, well, kind of fake. Also, we found out while actually working with these skills, majority of them do not have enough purchasing power from their community to actually shield those tokens. So think if there's an influencer have, let's say, a couple of 100,000 community members, and they shield 10 projects per month. Simple math. Do you think their community will gonna have the actual, just purchasing power to buy? Of course not. And then if you see these charts are not real. So unfortunately, in this space, also one more thing. If you give 10 signals, let's say to buy or sell, whatever, and out of these 10 signals, 3 do well. What KOL is gonna do? Are they gonna say that their success rate is 3 out of 10? No, they're gonna delete the old tweets, which we have found KOLs doing. I'm not gonna be naming names. I don't want to have death threats on my name, but we have seen KOLs deleting tweets, and there are tools where you can find it online as well, and just spotlighting those like I gave you solid like $2, I gave you Cardano like 5 cents, and now I'm giving you this. Yeah, and how many shit coins you gave that did nothing. So you have to be very, very careful with kills. Right now, the only kills that kind of work are usually the small ones that don't have a big community yet, and they're really trying to prove something. Because and then the moment they post the signal, you are their exit liquidity. So you need to be very, very careful which kills to follow. I'm not saying all of them are bad. There is definitely some good ones who are talking about fundamentals, who are just teaching you how to trade, and you can follow them, or those who are talking about the macro perspective, like hey, where the market is going, how can you evaluate the data you're seeing. But basically, if there is someone who is selling signals, I'll always isolate this. Imagine you're a trader and you're a very successful trader, and you can make double your money in, let's say, a year or even half a year, whatever KOLs are promising you. Why would you sell signals? Why would you sell this alpha? Why would you spend time creating Telegram community, having mods, having, people managing and answering questions? You would just silently enjoy trading and making money. And then if you actually want the fame, you probably would get the fame in different ways. So you have to be very careful with all of these signals. And number two, you have to be very careful with all of these courses as well. Because in majority, again, if you made a lot of money, why would you sell a course? You just continue making money. So I spend a lot of time in Dubai. That's my basically one of my kind of primary homes. If you see a guy posing with Lamborghini in Dubai, it's probably rented. And like there is even the website where you can check based on the number plate where the car belongs to. So you have to be
Really?
very, you have to be very careful with things because look, if you have wealth and if you have huge amount of wealth, you're not gonna flaunt it. Like you're not gonna
Mhm.
show it around social media. Like I know very successful people who are worth hundreds of millions. You would never say. You would never see that. You would never in their social media. They wouldn't be the ones posting, "Hey, this is my Lamborghini. This is my Ferrari. Oh, I'm here flying private." Like you have to be very, very careful and ask yourself, why this person having the secret sauce of success of money is sharing it with you rather than comfortably sitting at home making money and enjoying life.
Mhm.
Is it
Yeah.
fame?
Yeah, the hard part is, as you said, there is some good KOLs out there. There's some great people who love to create content and love to educate, but there is also a lot of people who are taking advantage of you, and
Yes.
it is very difficult to know the difference. And so, yeah, you really have to be careful, particularly when you're on uh, Twitter or TikTok or Instagram. Like when you're on these social platforms, that's where you have to be really, really careful because you can get a lot of people who are just fly by night come in, very easy to create content there, very to post, easy to get a following, easy to get a
Yes.
fake following, all these things that you've said. So yeah, yikes. Be careful out there, everybody. Be careful out there. It's
My recommendation is to get a mentor. Just find someone who
mm,
you appreciate, you like, usually meet them in person, and just ask them to be a mentor. And that's going to be much more valuable to you than following these crypto TikTok gurus on how to become rich overnight.
yeah, it's great advice. Great advice. Laura, thank you so much for joining us today. It's been a pleasure to have you on the show and break everything down and get some insight from you over on the Asia side. We really appreciate your time.
Thank you for having me here.
Thanks for listening in, everybody. Have a wicked awesome day. We'll see you back again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.